Assalamualaikum and hi everyone. Our group will be present on the articles which is understanding the differences on SME. Our group members consist of Najma Dania, Nur Nasha Machita, Nurul Atira Shafiqah, and lastly is Nur Shafiqah Shahada. And now let's take a look on our video presentation.
Investment appraisal evaluates investment options to determine their potential financial returns and benefits for a company. It helps organizations make informed decisions by analyzing the benefits and costs of various initiatives. The key techniques used include payback period. It calculates how quickly the initial investment is recovered. Next, net present value. It measures the difference between the present value of future cash flow and the initial investment. A positive NPV indicates profitability. Next, internal rate of return. It identifies the discount rate where NPV equals 0. Next is profitability index. It shows the ratio of benefits to investment costs. And lastly, accounting rate of return. It compares average accounting profit to the original investment with higher ARR indicating better investment. Investment appraisal combines the time value of money and risk analysis to help business allocate resources efficiently, avoid unprofitable projects, and align investment with strategic goals. It also aids in risk management by highlighting concerns and ensuring sustainable growth and value creation.
Moving on to the measurement of investment appraisal for question 1. The computation of the net initial outlay amounts to 670,000 ringgit. Meanwhile, for the first 5 years, the amount of after-tax differential cash flows amounted to 91,250 ringgit, and lastly, for remaining years was 110,000 ringgit. It is concluded that 20,000 ringgit is the final amount for terminal cash flows.
The payback period is 5.94 years. Next, the amount of net present value is negative 109,628. The profitability index is 0.8364. Next question is advise whether the company should invest in the new project based on the result. The company should not invest in the new project because the net present value is negative at 109,628. In other words, the present value of the project cash inflow is less than the initial investment required to undertake the project. The project is not profitable because the profitability index is less than.
Next, for the last question is we have to analyze the sensitivity margin of any two above variables from above question. For the first item, which is initial investment, the amount of sensitivity margin was 43.47%. That means that if the initial investment increases by 43.47%, the net present value of the project will become 0 or negative. The second item, which is for sales, the amount of sensitivity margin was 28.90%, that indicating the NPV will be negative if sales drop by 28.90%. For the last item is variable cost that states 626.16% as its sensitivity margin. This implies the variable cost would need to be raised by 626.16% to create a negative NPV. That's all from us. Thank you.
Next, the definition of SME. A small and medium enterprise SME is a business that maintains revenues, assets, or a number of employees below a certain number. The exact definition varies by country, industry, and organization, but it generally focuses on the size of enterprise in terms of scale and resources. SME are categorized of two main sectors. First sector is manufacturing sector. A business qualifies as SME if sales turnover or asset must not exceed Rm 50 million or the company must have 200 or fewer the full-time employees. Next, service and other sector. Sales turnover must not exceed Rm 20 million or the company must have 75 or fewer full-time employees.
The article Understanding Differences on Using SME's Web Before and After the Training of SME's Website Operation focuses on evaluating how training impacts the use of websites by SMEs small and medium enterprises in Banguntapan and Imogiri. The study investigates the challenges SMEs face in operating their websites effectively and how these challenges are addressed through targeted training. The research aims to assess the differences in website operation and usage among SME owners before and after training session. It also seeks to highlight the benefits of website training programs in improving digital engagement. The study employs surveys and interviews to gather data from SME owners. Pre- and post-training assessments were conducted to measure the impact of the training on technical skills and website utilization. SME owners had minimal experience and understanding of website management, leading to underutilizations of digital platforms. Common issues included outdated content and poor website navigation. Training significantly enhanced participants' abilities to manage their websites, update content, and respond to customer inquiries. SMEs were better equipped to use their websites as a business tool. The improved website management skills translated into increased customer interactions and inquiries. SMEs also reported a boost in confidence to adopt other digital tools for marketing and operations. The study concludes that training is essential for SMEs to fully harness the potential of digital platforms. It suggests regular workshops and ongoing support to sustain improvements in digital competency.